see what we are looking to trade. So as you guys know, I kind of look through seasonal data and hot data and the fundamentals, so we can kind of get an overview. Let's first of all open up a chart and let's use this. Let's share this screen over here. Oh gosh. Oh no, that should be all right. Screen 3. Well, Zoom had just changed up a little bit there. Okay, so here we go. Here's our here's a nice clean chart here. We are just going to change the foreground because I can't see it quite as well with black. So there we go. Okay. So we know that we have got a Trump administration, which is making things a little bit difficult out there, and I don't know whether that's going to how that's going to pan out. You know, we've got kind of like a lot of trade situation. We got a trade situation and a trade narrative, which is making things very, very difficult. And it's kind of putting, if you look at the markets, I mean, particularly sort of the FTSE 100, which I've got a trade on that. The Nasdaq is really coming down. This is really kind of the result of tariffs and uncertainty out there, coupled with the interest rate a high interest rates. We can't seem to kind of lower interest rates. So if we start by looking at what's coming up next week and see where we are at, we can just bring up a website called investing.com. You guys can use Forex Factory as well. Is another one, and I don't know, you know, if you're using Forex Factory and you prefer me to look through that, then it's absolutely fine. That they're both the same. Maybe Forex Factory is a little bit tidier actually. So let's have a look at that one instead. Forex Factory. I know you guys probably have got a little bit more experience with this one. So we've got daylight saving today in the UK. Now, what we want to do is just probably put in for the whole week. So if we put in until Saturday, now till Saturday, and apply settings, then we can have a look through the whole week. And we're just trying to get a feel of where the strength and where the weakness is in each economy. The interest rate is the most important thing when we kind of look to check out an economy. So if we when we're looking at currencies, let me just see if I can text on here. So what we're trying to do all the time, let me change it to black. What we're attempting to do is make an assumption on interest rates. Now, this is, you know, interest rate moves or moves in interest rate from central banks. That's the sort of like first thing. That's what we're trying to do. We're trying to make assumptions on interest rates because the interest rate is going to make a currency more valuable or devalue the currency. Now, ways we would do that is looking at inflation data. And that is basically kind of driven, inflation is going to be driven by growth. So this is predominantly, there's obviously other factors, and we are looking at inflation driven by growth, and we're looking at the labour market. Because if the labour market is weakening, then a central bank is much more likely to kind of adjust their policy. So they're much more likely to lower interest rates if the labour market is weakening. So when you get a really kind of strong economy, it does that. The reason that the strong economy kind of leads to people buying that currency is that the interest rate is likely to stay high or go up because you get inflation, and to control inflation, central banks will higher the interest rate. So what we're trying to make an assumption on is the interest rate and where interest rates are going. Now, for quite some time, really, kind of what let's put this over here. What the market has been attempting to do is I'll make that a bit smaller so we can move it, so put it up there. What the market is trying to do is kind of make an assumption on whether, you know, Donald Trump is going to affect the US economy so negatively that Jerome Powell has to lower interest rates. But you can see, if we look at kind of what happened, you know, last week, he didn't lower interest rates. And if you look at the you know what central banks are saying, it's going to be a slow move. So we're really kind of looking out for all these kind of these data points to try and make an assumption on where things are going to go. So when we look down here, we look down sort of like what's going on here. You can have a look in, you know, what's going on in China. Now, China will enable us to kind of get an idea of where the global economy is going. And this is quite important. So if you look at Forex Factory, you can actually click on the end of it and sort of see the chart. Where are PMIs? This is the Purchasing Managers Index. So the Purchasing Managers Index is sort of showing us what are they doing? And when it's weak down here, that suggests one part of the global economy is shrinking. And we can see here there was a slight pickup. So above 50 is kind of suggesting that there's some growth there. Germany CPI data is going to be important because that's going to lead into the Eurozone. Chicago PMI, that's going to be important. We get an interest rate next week from the RBA, and we can start to kind of make an assumption on where the interest rate is going to go. Now, we've already had a hold from both the Fed and the Bank of England. So the question is, if the RBA are likely to lower rates, that would suggest that the Aussie is going to weaken. Depending on where the Aussie is, this is what's predicted, a hold. So it's previous at 4.1. It's predicted to remain at 4.1. So they're predicting a hold. Now that, depending on where it is in the price action, we can make an assumption on whether we should be buying or selling. And we'll have a look at the chart of that one. See what's going on there. But CPI data, ISM manufacturing. So this is a PMI data from the United States. Are we going to get some negativity there? Manufacturing has been suffering. So let's click on the chart again. Now look where it is. It's kind of like, you know, moving down here. And you know, ISM is a decent leading indicator for GDP. So the ISM, particularly manufacturing, ISM manufacturing is a decent indicator for GDP. And GDP is about growth, right? So if we sort of like think about the ISM, I don't know if that's too small for you guys, but if it is, let me know. I can boost it up a little bit. No, not sure I can. Let's put that up there. So ISM is a manufacturing decent indicator for GDP. So when this is negative, when we see the ISM is negative and shrinking, what it's suggesting is that there is a potential for recession to be on the cards. And we've seen that this has been shrinking since December 2022. So even though we had all that liquidity kind of in the market from the Fed after COVID, there has been consistent shrinking of ISM. Consistent. There was a little pickup here in April 24, but since then we've been down. Now there has been another pickup, but there was another dip down to 50.3. Now, regardless of whether there's a pickup here, it's still just about above 50. So very, very slight growth. So the US economy looks like it is just going through a little bit of a sticky period. Now, remember, this is kind of what Trump wants. What Trump wants is to what we assume he wants anyway, is to weaken the US economy sufficiently so there is a lack of growth, causing a lack of inflation, causing the central bank to push down interest rates or being allowed to push down interest rates. So then we start to see the growth. So we're really looking at sort of a phase where things go down artificially, so then they can get kind of helped out artificially. So this does still suggest that there is some weakness in the US economy, and this could well push the dollar lower, depending on what that number is. So we're going to watch out for that number as well. So ISM is a decent predictor for or indicator for future GDP. All right, let's see what else we got. ADP non-farm employment change. This is also going to be an important one. Predicted to come in higher. Let's see what happens there. Swiss CPI won't be a huge effect on the market, but it might affect the Swissy a little bit. Unemployment claims, again, an important number. So it's ISM services, ISM manufacturing, unemployment numbers, average hourly earnings. This is about inflation, non-farm employment. So and then Jerome Powell will speak on Friday. So it looks like we've got mostly stuff coming out of the United States. So the dollar's going to be front and center, as is the Aussie. So here we have a quick look at what is suggested with the both the Aussie and the dollar. Let's see if I can. I'm not sure if I can move these. Can I? No. Move these up here. Okay, so we're trying to make assumptions on interest rates, inflation driven by growth, labor market. ISM is a decent indicator. So we're going to look at the ISM manufacturing and services. So let's have a look at the Aussie dollar and see what is suggested by the chart, because these are sort of like two main ones, and we can certainly pair the dollar against anything else, and we can certainly pair the Aussie against anything else. So let's see what they suggest against each other. Let me see here, Aussie dollar. Right, now, looking out from the monthly, where we are with the monthly is at a relatively significant point here. We're not quite there yet. So there's a level here, but we are struggling to get above this zone here. This is in a downtrend. Everybody can see that this is in a downtrend. A series of lower lows and lower highs, except for we've kind of got a little bit stuck here. There's the area really of support. It's a bit tricky. There's the lowest sort of like area of closing support and opening support. And we've just bounced off this area. So when you look at this chart, and I'll ask you guys in the room, when you look at this chart, what does it suggest to you? Should you be buying? Should you be selling? Or should you be getting ready for a move in a direction? What do you guys think? I just want to make sure you guys can hear me as well and see the chart. We've had no sort of comments in the chat yet. But what do you guys think? Buying, selling, or it is buying. Okay, cool. Okay, anybody else? Okay, Linda's selling. I mean, it's down to what you think. So it's not really a question. It's anything to do with trading is an opinion, right? It's not there's no definite. So if you believe sell, Linda, that's cool. Chin believes buy. So let's see what other evidence we've got. Now, so far, if we look at this monthly chart, hopefully you guys can see it nicely enough. We have got a 1-2 month bounce off this low so far. But when it tried to bounce and this is the way that we're going to interpret these bars now. Selling as the green candles are signs of more sellers and is in tune with an earlier downtrend. I like that. I like that as well. That particular view is correct. What we've had is a hold here, an attempt to push up, but a failure to push up. A hold at the next month in February, an attempt to push up, but a rejection again. But what we've got so far this month is just a bit more positivity. So we've got Monday really to complete, but really we've got bars here which suggest that there are buyers trying to push it up, but sellers still flushing out. So this does actually suggest indecision. So at this point, we could be getting ready for a buy. Now, for me, I wouldn't really want to sell down here because these are lows that we saw back in, during the COVID-19 situation and scenario, and back in May 2008. So this was previously a bounce point. So I wouldn't be interested in selling down here. I would be more interested in looking to see if there's any buying opportunities because there's more room up, much more room to the upside. Now let's have a look at the weekly. So what we've got with the weekly actually is a slightly different picture. We do have a bit of a range. You know, it's not really kind of crystal clear here, but we do have a bit of a range that we're stuck inside of. I'm gonna make these a little bit thicker. Here we can. We've got this little range that we're stuck inside of. We're kind of around about the middle of the range, closer to the lowest point, but we're around about the middle of the range. If we look at last week's bars showed the prior week did actually try and get out of the top end of the range, but was rejected. Last week's bar managed to hold, and you can see that there's a very small horizontal level there. So there's a little hold point here on the weekly. So that's suggesting that there is some support here. It's suggesting that there is some a horizontal level there. And there's a tiny trend line going along here as well. And we're right on top of that. We're right on top of this trend line here. So looking at the month, the weekly looks still a little bit questionable, but it is it's questionable, but it is holding. It is holding. So if we sort of like lift down what we have here, I'll make these bigger. If I can now. So what we have is indecision on the monthly. Oh, that's how you do it. Okay. Let's make this size here. We have indecision. On the monthly. And the weekly is in a trading range. Okay, so the weekly's in a trading range. Um, but it is at support. So when something's at support, put a big but here, but it is at support. So when something's at support, then we're more interested in buying than selling. Okay. Now at this stage, we're not worrying about the Aussie dollar as a trade. What we're trying to ascertain is which is what's being suggested by the Aussie dollar. Does it suggest that the Aussie could be a buying opportunity, or does it suggest the dollar's a buying opportunity? And then we can kind of go down the other currencies and see, is this the best pairing? Maybe we want Aussie dollar, or maybe we want Aussie Swiss, let's say, or maybe we want Aussie Euro Aussie, something like that, or maybe we want Euro dollar. So we're just trying to sort of like see out the two currencies which have got the main push this week, the main drivers in ISM manufacturing, ISM services, and the interest rate, which is kind of looking like it's going to have the most, which has got the highest probability of going higher. Now, so far, we've got indecision on the monthly, and we've got month end on Monday. We've got weekly in a trading range, but it is at support, so it slightly starts to tilt the chart towards the Aussie dollar long. Now let's have a look at the daily. We'll just come out a little bit on the daily. Tighten up this line. So the daily again is on support here. And clear these out just so we can have a look at the bars and see what this is kind of giving us. So really what we've kind of got here is there's a low down here. So there's a low. There's a high. Here's a higher low. But this is a lower high. So again, this is kind of like in a little bit of this is starting to squeeze into a trading range. So what we're really looking for with something like this, even though this could be a trade down here to the upside on that support, the issue that it has really got is that it's also forming this head and shoulders pattern, there. So that's also kind of like a negative sign. That would suggest that we could break through this low and just keep coming down. So really, when we see this low, this high, higher low and lower high, that would suggest we got something like a pennant. And with that, what we can do, get rid of these, is just draw a trend line here. And then we can get an idea of what we might want to do. So from this, we could sort of like suggest that for us to get a decent signal out of this, we'd want to see this push higher and break these zones, probably breaking through this high as well. So if that can break through that high, then come back and test it, test the zone, then we might well have a buy that we can take on board. So we'd be probably looking, let's be green. We'd be looking for something like that. And the idea would be to buy this bar. And pretty much anywhere you'd want. You'd want to try and get in sort of like the lows if you could, sort of like to get the run. But what this is sort of kind of saying is maybe we could be a little bit early on making a decision against the Aussie versus the dollar. So now we can have a look at some of the other data. So let's have a look at the COT data. Is everybody okay with this? Anybody got any questions? Or a different way of viewing this? This is just obviously the way I'm viewing it, but it's not necessarily the right way. But that would be the way that I would view this. Anybody got any other things? Linda as well. You guys kind of and Anne, you guys and Chin, you guys had an idea of what you'd like to do. Any difference of opinion? Linda and Anne, you are both sellers. Any difference of opinion now looking at the chart, or are you kind of still keen on looking for selling opportunities, which is still fine, by the way. Trading is completely about opinion. So my opinion would be we might need a little bit more data. Hopefully, it will only take a couple of days. But maybe by midweek we could be looking at along here. But I'd want to wait and see if price can break out of this little pennant, this triangle pattern here. But have you guys got any other opinions, or anybody else got any other opinions? Or have you got complete confusion? Or are you even still there? I don't know. Okay, all right. Well, maybe I'll move on then. Um, okay, so from here, what I'd want to then do is kind of get an idea of which is where's the COT data? What's the COT data kind of telling me? Where's the money? Now, this is the current COT report here. And we'll look at the dollar and the Aussie to start with. I'm just going to get rid of all these. There we go. Right. So this is what we got with the COT report for the Aussie. We will be looking at asset managers for the Aussie. Now, what this is kind of, when I'm looking at this, oh yeah, so Linda, I got you. Oh, sure. Yeah, we'll have a look at gold for sure. Okay. No, not this sort of. So let's sort of like see if we can run through that, Linda. Well, in fact, let's just go back before we cover the COT report. We got questions about gold and we got questions about interest rates. So, um, this is the way it kind of works. So when inflation is high, or let's say is rising, the central bank has tools, okay? So central bank has tools to kind of curb the inflation. They're looking for 2% if, because that's the sweet spot. It's the Goldilocks kind of area for growth, not too hot, not too cold. If you think about GDP, okay, so central bank tools, let me just finish this bit. Central bank tools is quantitative tightening. And what they do with quantitative tightening is uh, what they do with quantitative tightening is buy assets from the US government. Okay, so they kind of take those assets off the table. So quantitative tightening or raising interest rates. Sorry, they sell assets. Okay, so inflation is rising. Central banks use quantitative tightening or raise interest rates. Okay, or both. So if inflation is rising, you will get, if it's rising, you will get um a you will get less for your money. Okay, interest rate rising, it's less for the money, which does devalue the currency. However, if a central bank sees that this gets too extreme, then they might decide. So if it gets to an extreme, then central banks may then decide, CB decide to raise interest rates, raise IR. Okay, so if it gets too extreme, the central bank or the Fed, in this case the Fed, the central bank might decide to raise interest rates. Now, if they do that, then it puts value on the currency because all of a sudden now your currency buys more. So what traders do now, traders don't want to wait for that interest rate rise. So if they see higher inflation, they may buy the currency in anticipation that the central bank will raise interest rates. So ultimately what we're trying to do is guess where the central bank is going to place their interest rate level. So inflation is high. The currency can potentially weaken, but only if you believe that the central bank will do nothing to counter it. And the time that you will believe that is if it's just a little bit higher. If inflation is just kind of like, moving a little bit above between 2 and 3%, then yes, the currency can weaken. But if you start to see 3.5 to 4%, then you'd start thinking this could get quite dangerous for the central bank. So then you have the opposite view. So it's not quite as clean cut as you'd think. You're really sort of having to kind of make an assumption on how bad is that inflation, how dangerous is it, and will there be central bank action? If there won't, then yes, the currency can weaken. If there will, then the currency is likely to strengthen. Does that make sense, Linda? It's not a complex situation, but it is a layered. It's kind of multi-layered. It's not quite as kind of clean cut as you'd initially think. Um, Great. Okay, fantastic. Okay, so now with this kind of in mind, I'll get rid of this. Yeah, with this in mind, then let's have a look at gold because gold is an inflation hedge. It's always been a hedge against inflation. And what we've seen is gold, driving as an inflation hedge. Now, the other thing that's going on with gold, of course, is that we've got global uncertainty. Now, the key with gold, you make a really kind of good point with the tariff, um, and there's a view that it could crash below 3K. My view would be it will absolutely crash below 3K. But when you kind of, this is no different to kind of like trying to catch the falling knife. This is like trying to catch the rising balloon. You do not know when this thing is going to pop. It will pop. And the reason I would say it with relative confidence is that there is so many areas where this hasn't come back and tested. This is a monthly chart. This hasn't tested here, hasn't tested a breakout there, and currently it hasn't really tested this point either, which is below the 2000. I mean, you know, what would make it go down there though, Anne? You know, if you think about why it's gone here, then you're really thinking about the reverse happening, right? So if the first reason that gold has rallied so hard, or one of the reasons, one of the drivers of gold, if it is an inflation hedge, so this is what we understand about gold. You know, everybody always says this. So gold is a hedge against inflation. Okay, so it's an inflation hedge, which means that if inflation recedes, gold should follow. It's also a safe haven. It's also a safe haven. So people are sort of like looking at gold as a protection against tariffs, against trade wars, all this sort of stuff. So if that also gets resolved, then again, gold should weaken. So if we think about what the drivers are, so if gold is an inflation hedge, that's the driver for gold going higher. If inflation recedes, then gold should follow. So gold should start to come down. If we sort of like start to see inflation kind of calming down a little bit. Now at this stage, the central banks haven't got any real kind of confidence that inflation is going to be, dumping. There are sort of like signs. If Donald Trump weakens the economy sufficiently, then yes, we would see inflation, start to kind of weaken. And then potentially gold could follow, but it might also act as a safe haven at that point where people are like, well, where am I going to put my money? But what could also happen is as gold as the economy goes into recession and asset values like the Nasdaq and the S&P start to tank, where are people going to get money from to buy those assets back when it hits the sweet spot? They're going to sell assets they've already got, like gold. So this is one of the reasons that we're watching out for this recession. Gold ultimately is still, it's still the kind of main asset to kind of use and buy because people want the safety and protection. But when that safety and protection is no longer needed, then they will be going, I'm going to buy growth assets. I'm going to buy the Nasdaq. I'm going to buy the S&P. I'm going to buy the Russell 2000. I'm going to buy the Dow and all the other stocks that they want in the world. So where does that money come from? It's not like new money that kind of comes in. This is just asset allocation. Around asset allocation. How you sort of like move your money around the place. So what I'd be looking for is when the narrative changes, look for those inflation numbers, look for CPI data, look for PMIs. When the numbers start to change, I personally, what I'd be doing right now with gold, if I was long, is closing the position. But I wouldn't be going short. It's a little bit too early. There are no sort of like definite signals that inflation is curbing, and there's no definite signals that tariff arguments have subsided. And I don't think that will probably happen until maybe sort of like August, September time. So gold's got a decent chance of at least kind of, bobbling around in this particular area. I wouldn't be looking for a crash just yet. I'd say you're a bit early. That'd be my personal view. But again, trading is about opinions. And you never really know. But this wouldn't be an asset I'd be as interested in now because Trump flip-flops. One minute he's causing a disaster, and the next minute he's kind of causing love and peace. So you just don't know where he's going to go. But if I was, if I was in a position with gold, I'd just be tightening up stock. Maybe, but again, I'll be taking a bit of profit off the table. But I'd be tightening up stock for sure. But I wouldn't be going short. Okay, so just quickly back to yeah, I mean, when it comes down to Donald Trump, I've given up having a view on him because 1 minute I kind of think, oh yeah, that's quite good, and then the next thing I think, what an idiot. So I can't bother to kind of give him any more of my time really. I'm just looking at Trump as what's he going to do with the market and where's the money, and then just try and trade it. But when it comes down to him himself, he's just so difficult to work out. You know, sometimes he seems really dumb, sometimes he seems really clever. Or he's going to get what he wants, I suppose I should say. Anyway, so this is the Aussie. Now, what the way that I would read this on with the Australian dollar is that this is right in the middle. What I like with COT data is to look for extremes. So you can see sort of like if this was the previous extreme, when it comes down here again, I'd be anticipating a bounce from this point. And when it went up to this extreme, I'd be anticipating a bounce down again, which it does twice. Now, again, here's the extreme low. I'd be anticipating a bounce. It just about bounced there, but it went through there and created another low. So hopefully there wouldn't have been a buy signal on the chart because I would have been long if there was. But let's say it comes down here now, bounces. So now I'm looking at this as the extreme low. Interesting point. There's the extreme high in line with this, and it comes down again. So where we are now is a little bit no man's landy. I don't really like it here. So I'm not really that interested in not really that interested in the Aussie when it comes down to the signals from the COT report. Now here's the dollar. Same thing happened with the dollar. It kind of hit these relative extremes here, and I say relative because there's some up here, but this is the last time it kind of refused that level. Let me make that a bit bigger. And now we're on the way down, and we got a little bit more room. So this is slightly bearish dollar. So I'd be, looking at selling the dollar, probably not against the Aussie, but let's have a look at through the others now. This is the CAD. Now, the reason I put both the levels on the CAD here is that when this one, which is the dealers, when they tends to weaken, the CAD tends to strengthen. And when the asset managers tend to strengthen, the CAD tends to strengthen. Now, look at where we are. This is what I was just talking about. These are the extreme zones. So I'd be looking from the COT data, I'd be looking at CAD long. That's what the COT data suggests, that we should be looking at long positions in the CAD. Not only is it at an extreme, but it's also turned. What's the Swifty saying? The Swifty is also at an extreme. So I wouldn't be going short anymore on the Swifty because we're down here, but there's no buy signal. It hasn't turned yet. So Swifty is kind of like off the cards, but maybe on the buying watch list. Pound is another one which looks like it's kind of like right in the middle of a zone, but a bit more positive. So the pound is still, okay. If the pound is trending, I'd be looking at staying with that trend. That was a bit of a buy. Actually, I should have noted these down. So CAD is a buy. The Swifty is wait. And this is just in corner in conjunction with COT data. The Swifty's weight. The pound is a continuation. So you can stay with the trend on that one. Let's have a look at the yen. The yen again I mean, the yen sort of sold off a little bit, but it looked like it held a bit last week. I'd be waiting on that one maybe. It's not really at an extreme, so not quite as interested in that one. The euro again is continuation, but if you look at look at how even the COT data kind of created this trend. I don't particularly like this. We're not really sort of taught to use trend lines in COT data. So really this is down to your particular taste. But when I see this, I think, well, you know what? We're not really taught to see trend lines in COT data as buying goes on, but there's definitely a trend line here. And that would suggest to me that I wouldn't be that interested in the euro, and I'd be more interested in waiting to see if there's a sell signal. So yen's a wait, euro's a wait, Aussie's a wait. The Kiwi's a tricky one again because it's right on the it's kind of found this way lower than this extreme, and I'd like to really see that one boost itself higher again, and that's continuation as well. So we're looking at so we're really looking at yen. We're waiting. We're looking at euro waiting, but maybe even waiting for uh signs of a sell signal. Um, and what else we got? We have the Aussie. That's a wait, difficult one. Sorry, should have put that on there. Aussie's a wait. Kiwi. I'm interested in the Kiwi long, but it's just not yet that attractive. So wait for buy signals. And finally, the dollar is continuation. So the data is going to be quite important this week. So that's sort of like, these are the ones that I'm kind of looking out for here. Let's put this over here. I don't think you can create a background with this text, which is annoying. You don't see that, okay. So this is where I'll be looking. So the CAD's a buy, Swissie's a wait, pounds a continuation, yen's a wait for sell signals. So Euro CAD might be something to look for. Aussie is a wait for buy signals on the Kiwi and continuation on the dollar. So this really sort of, according to COT data, um, I'd be looking at the Euro CAD probably for a buy. Maybe the Kiwi CAD, Euro Kiwi for a sell. So that's the way that I would interpret this so far. So now we've got these on here. Let's see what the Euro CAD suggests. So the monthly on the Euro CAD is rejected this area here. Now we're looking at selling the Euro CAD. Now look at that bar. This is the bar that we see in January. Then we get this engulfing bar. So if we'd not had, now this bar is still forming, the current one is still forming, but if we'd not had this bar, we would be looking for selling for sure. Because this is a high test bar right off the trend line, and this is an engulfing body. So monthly is suggesting sell signals on these two bars, and that goes along with the COT data. So right now I'm comfortable with this one. Now let's have a look at the weekly. Oh, sorry, that's the weekly. That's the weekly. That's the 2 weeks. The monthly was at the minute it's still forming. The monthly may well want to come and test this area and create something really negative. That's a 300 pip move potentially. Weekly is suggesting that so actually this bar has closed. So last week it attempted to get down, but it bought back up again. But it's a little bit indecisive because it also tried to push up. So let's see if we can get anything from the daily. It's going to zone out a little bit. Right, we do have a trend to the downside with the daily. So we got this high here. We've got a low in here. Is this a lower high off the trend line? That's what I'll be looking for. A bar which suggests that this is getting rejected. And then I'd be quite happy to try and play this one short. There's a trend line down here. Let's see how steep this other one is. There's one there as well. This one we can probably say it's broken through. Actually, that one's quite nice, that one, because that one that one is also resistant. So there's a sweet spot right here with the Euro CAD. And there's no sort of major data from these two. So that's what I'd be looking at, maybe a move. And that would also meet this high here. That would also meet the horizontal level that we picked out on the weekly. So this would be the sort of, when I'm kind of going through these, I'd say Euro CAD to me, that seems like a fair position to attempt to take. Now, seasonally, the CAD is in a bit of a strong period. It is it only tends to be superseded by the Aussie and the pound. The Euros are kind of a middling performer. So the Aussie, the CAD does tend to outperform the Euro as well. Massively actually for this week. The CAD is probably the outperformer in the week coming up. But for over the month, it's actually a pretty good performer as well. So all in all, after kind of doing a bit of fundamental analysis, seeing that those two aren't really, we see some CPI data from the Eurozone. After doing the COT analysis and seasonal analysis, I'd end up saying the trade of the week to look for trade of the week for me. Look for sell signals on EuroCAD. And that'll be it. I'll get rid of it. And then we're ended up that. So that sort of would be my process of elimination, kind of looking through all those ones, and this is the one I'd look out for. That's what I'd kind of end up with. I'm not trying to give you kind of trading advice, but I'm just sort of like trying to show you my process. And this is what I end up with. I end up with a look for sell signals on the Euro CAD. So if anybody's got any questions, I'm happy to take them. Otherwise, I think we are pretty much probably about to close. So you guys got any questions or anything else that you want to kind of discuss? Put it in the chat now. Otherwise, I will bid you all a fair and happy Sunday and safe sailing in the markets next week. Okay, no questions. Great session. Thank you, Linda. Thank you very much. Nice to get some feedback. Thank you, Chin, as well, and thanks, Dan. Thanks, Paul. Okay, have a great week, guys. I'll see you all very, very soon. Thanks, Desmond. You're welcome. You're welcome, Eugene.